This three-step candlestick strategy made me hundreds of thousands of dollars in payout. And over my 8-year trading career, testing multiple different strategies, this one is by far the most simple, profitable, and easiest to learn. And in this video, I'm going to be breaking down that exact strategy as well as the fully backtested win percentage of this system. Be honest, how many times have you went into the markets looking for trades at random times with no clear trading plan? Now in this video, I'm going to talk to you guys about the simple strategy with a full 3-step checklist that shows up multiple times a day at the same exact times. Now this is the same strategy that's helped me achieve hundreds of thousands of dollars of verifiable payouts from multiple different firms. Not only have I been able to make money off this strategy, but multiple other people have been able to do the same thing, getting funded and getting to their first payouts. Now, by the end of this video, you'll be able to have a full profitable trading strategy that is super simple. Have a full 3-step checklist you can follow every single day and identify multiple trading setups to help you trade with confidence. Now, we're going to go ahead and get started by first of all breaking down the candlestick anatomy before we get into step 1. Simply put, we're going to break down a bullish candle where we have an open, the price creates a low, the market creates some sort of high, and then we have a close. Inversely, for a bearish candle, we have the open, the market creates a high, creates a low, and then we have a closing price. On a bullish candle, the market pretty much closes above where it opened, and a bearish candle essentially closes below where it opened. Now, understanding this, every candle has an opening price, has a high price, has a low, and it has a close. And this happens on every single time frame. Now, why does that matter? Because if we have a full strategy that can predict the next direction of the next candle, this gives us multiple opportunities throughout the trading day because there are multiple candles that form across various different time frames, which is going to lead us into step number 1. We're going to identify each 4-hour candle's opening. This is going to be our trading windows. Whether you're trading futures or FX, we're going to have different time windows. So for futures, we have the 2 a.m. 4-hour candle, which is going to be the London session. We're going to have the 6 a.m., which is going to be pre-New York. We're going to have the 10 a.m. candle, which is going to be the AM session. We're going to have 2 p.m., which is going to be our PM session. And we're going to have 6 p.m., which is going to be our futures open. FX timings are pretty much 1 hour prior to this, and this is going to be labeled right here. But for the sake of this video, I'm going to be focusing on futures. Now, understanding when the next 4-hour candle opportunity presents, would this help you become more disciplined, knowing exactly when a setup may form? Which is going to lead us to step number 2, where we're going to wait for an engulfing bar play. Simply put, a bearish engulfing is when the price sweeps the prior bar's high and we close below the prior bar's opening price. And again, for a bullish engulfing bar, this is when price sweeps the prior bar low and we close above the prior bar's opening price. This is going to be significant as we get into step number 3, where we're going to use that EBP candle on the 4-hour time frame with a run on stops, and then we're going to enter on the next candle. So on the bearish engulfing, we're going to essentially look for the prior day highs or the prior week highs, and we can even use a session high or a session in this example. Inversely, for a bullish engulfing, we're going to wait for this to form as it takes out the prior day's low, or the prior week's low, or again, a specific session low. Now, we're going to look for some sort of key level inside of this EBP candle around the 25 to 50% mark, and we're going to look to time an entry on this next 4-hour bar to look for the next expansion move higher. Now, we're going to go over this on TradingView so I can show you guys exactly how to enter and how to place your stop losses using this system. Inversely, for the bearish side, we're going to take the candle high, candle low, and we're going to look for some sort of key level inside this area for us to time the entry on the next candle to look for the next move lower into some sort of key level. Now, if you guys want to know the fib settings that I'm using for that example, here it is, where we have the 0, 0.5, 0.25, 0.75, and the 1. This just gives us our range. Now, let's go ahead and let's look at examples of live trades that we were taking using this concept. But before we go ahead and do that, again, guys, if you aren't already part of the public Telegram, where you want to see my weekly analysis 100% for free and more breakdowns of stuff like this and strategies that I talk about on YouTube, make sure to join, link in the description below. And if you want to catch the same trades I'm catching across different asset classes, the broker that I'm currently using is offering a 100% deposit bonus if you're using TradeLocker. This is the same broker that I'm using to trade indices and FX as well as metals. So if you're interested, make sure to check the link in the description below. And let's go ahead and let's head into TradingView. With knowing when your setup happens and creating a rule-based system help you stop overtrading and become more disciplined. This is the most difficult part when it comes to most traders. They don't know when the specific setup happens, and then they end up finding themselves watching the charts nonstop, which then leads to over trading, which then leads them to having just negative results because they're constantly watching the charts. And this is why this system and strategy will help you do that. Now, let's go ahead and let's actually break down how we're going to execute on this specific strategy. So obviously rule number one, we're going to look on the 4-hour time frame and we're going to wait for this EBP to form during, again, one of those specific 4-hour bars. Again, if you're someone who's trading the New York session, you have multiple opportunities. You have the 6 a.m. candle Eastern time, you have the 10 a.m. candle, and then you have the 2 p.m. candle. Now, I will make other videos on how you can anticipate that 4-hour candle. That's not necessarily this setup. There's multiple different setups that I typically use. This is just my favorite one. However, so if you guys want videos like that, just make sure to subscribe because I will refer down to that. Now, once we have this, what we're going to do now is on the H1 to M15, we're going to look for what is known as a fair value gap. A fair value gap is essentially a 3-candle pattern where you have one candle, candle number 2, and candle number 3. And let's label that. So you have candle number 1 in here. Then you have candle number 2. And then you have candle number 3. And essentially, the fair value gap is this part in here where price has never traded through in between candle 1 and candle 3. So let's go ahead. I'll make this a different color. And this is going to be our fair value gap. Price has never traded back into this. Now, all I'm looking for is on the 15-minute and on the H1. I'm looking for this setup inside of this 4-hour range. And the way I'm going to enter is when the market taps back into that area, I'm going to enter a limit short. I'm going to put my stop loss above this candle bar 1. So our stop losses are always going to go around candle 1. Our entry is going to be at the fair value gap. If it's a very big gap, I'll typically use 50% of the gap's range, which is going to be in here. And then again, I'm putting my stop loss above candle 1. And if we're looking for buys, it's going to be the same thing, but in reverse. So let's go ahead, use this system and strategy through our backtest. So here we have an example where we have an engulfing bar and this candle forms at 6 o'clock. Now, for me personally, I like to trade during the New York session. So for me, it's going to be 6 o'clock. I'm going to be checking the 10 o'clock candle, and then I'm also going to be checking the 2 p.m. in the event that we have some sort of PM session move. For indices, this is going to be our key time windows. So let's go ahead, and right here is going to be our 6 o'clock candle. Now, we also take out the Asia session range, which is going to be the consolidation during rollover period going into midnight. I talked about this in prior videos. However, the market overall takes out that Asia session range, and then we form our EBP. So remember, now we're going to go down to the lower time frame, and we're going to see, is there a fair value gap that we can go ahead and enter? So we'll go back to the 1 hour. So now here on the 1 hour time frame, let's see if there's going to be any fair value gap that's created. So we have our fair value gap that's going to be present right in there. And again, this is going to be where we look for entry. Now, I will go down to the 15-minute if I don't see anything on the 1 hour time frame. It's going to be up to you. However, we're going to go ahead and we're going to simply put a sell limit right at that fair value gap. Stop loss again is going to be on that candle bar 1. So we have a candle 1, 2, and 3. We're going to put our stop loss above there, and then we're going to go ahead and do a fixed 2R. Now, there are different ways that you can optimize this system for a better risk to reward, but that will be talked about in later videos. So as we play this forward, we get the fill right there. Our stop loss is there. And then once the market makes new lows and we have closes below new lows, we can then either move our stop loss to break even, or we can kind of just adjust it accordingly. We'll just leave this in this example, and then our 2R gets hit. So in this example, nice, easy entry. The market hits our 2R, and then we're out of the trade. Now let's go ahead and let's look at our next example. So here we have our next example. Look how the market takes out again our Asia session range high, which is a key liquidity pool. And we have our engulfing bar that sets up here where the market takes out the prior bar high, and we have a close below the prior bar's opening price. So now that this formed, we're going to go down to the 1 hour time frame, and we're going to see if we can get some sort of entry. So right here is our fair value gap. So we're going to go ahead and mark that range out. This is going to be our candle bar high that we're going to have our stop loss. And then we're going to go ahead and look to see if we can get a solid 2R off of this move. Here's going to be our 2R. And again, we'll see if we can get any fill. So the market trades forward, and again, no fill. So now we go ahead and remove our limit. This is going to happen. This is trading. Sometimes we're not going to be able to get an entry on the move, and that's okay. So off to our next example. So here we have another engulfing bar that formed right at 10 o'clock. Now, this one is not necessarily, it does not take out any key liquidity pool in terms of a prior day high, prior week high. However, we are sitting inside of a bearish fair value gap in here, and the market is showing us a bearish setup in here as we take out the prior bar high and form our EBP candle. So when we're playing continuations, this could be a continuation model where the market then has the next leg lower. So let's go ahead. Let's see if there's any fair value gap on the 1 hour time frame inside of this 4 hour candle. And we have it right here. So I'm going to remove this, and we see this fair value gap right in here. And when you see a fair value gap that's lined up with a breaker or some sort of resistance as well, like a prior low, that's just even more confluence for the level. So let's go ahead. We're going to set our limit right at the candle bar's high for the fair value gap. And our stop loss again is going to go above this candle bar number 1. And we're going to go for a fixed 2R. And let's see how this one ends up playing out. So as we play it forward, we get our fill. And the market looks like we're going to continue lower. And our 2R is hit. And again, this is the power of knowing when to go for a setup and how to execute on a consistent basis. Yet now let's go ahead and let's look at our final example. Now here we have another EBP candle. Again, this one's from 6 o'clock to 10 o'clock. So now in the next candle, we're going to look to see if we can get some sort of entry at some sort of either M15 or 1 hour fair value gap. So let's go down to the 1 hour. 1 hour candle is very, very big. There's no fair value gap as we go into the 10 o'clock. So let's go ahead down to the 15-minute time frame and see if we can see anything setting up. Okay, so now we have our fair value gap in here. And one thing that I'm going to do, because this gap is a little bit wider, put our limit around the 50% mark, like we talked about in the beginning, and we'll go for a fixed 2R. So let's see if we can go get a, let's see if we can get a fill. Right there, the market rallies up. Sometimes this is why I put the limit right below the 50% mark, just in case. Now we'll see if we can get that fixed 2R. All right, so now another fair value gap forms. The market is respecting that. And we hit our 2R. So as you guys can see, this is a repeatable system that occurs at the same time every single day. Now, if you guys want to learn about a 1 hour trading strategy, very similar to this with very similar guidelines up here on the screen. So make sure to go check out that video.